Welcome back, Fail-Safe Investors, and if this is your first time to my channel, welcome to my channel, Fail-Safe Wealth, where I give you advice on how to build wealth, and I give you the tools to go out there and build your own wealth. If this is your first time to my channel, I'm doing a little special that I haven't come up with a name for yet. I don't know, I might call it like Battle of the Brands, or stocks stakes or equity stakes or something like that. I don't know. So pretty much what I like to do is I like to take two companies that I've already analyzed individually within that week or whenever I've already analyzed them, and I like to pretty much put them up against each other and see which one will be the better investment pretty much. So we're gonna do that today with two companies that I've already analyzed this week, Pepsi and Coca-Cola, and let's see what we got. Okay, so let's jump right into it. So before we get into this video, I want to give a special thanks to my brother Mike for this setup right here. He pretty much hooked me up with this one. It's probably top of the line. I'm not, that educated on computer systems and all that yet, but I trust him. This is top of the line stuff right here. Working out nice for me so far. So let's get into it. So we're comparing two companies. It's three things you want to look at. And those three things will be growth, sustainability, and value. So those are three questions we're going to ask in this video, and I'm trying to do my best to answer those questions for you. But I'd rather give you the information for you to figure it out on your own if these companies, or which one between these two companies, has a more growth potential, sustainability potential, and a value. Pretty much, which one are you going to get that bang for your buck? Meaning, like, if you invest right now, in 5 to 10 years, will your investment double, triple, quadruple, all of that. So let's get right into it. Okay, Coca-Cola, ticker symbol KO, is currently selling at a price point of $46 a share, has a very large market cap of $191 billion. I'm sorry about that, and pays a dividend of 3.6. So that's pretty solid dividend payout, and has an earnings per share of $2.32, if I'm not mistaken. It's not much, especially when you look at Pepsi earnings per share, but I'll get to that in a second. And they have a price to earnings ratio of 19. So that is pretty good when you look at that. Okay, PepsiCo, ticker symbol PEP, is currently trading around $134 per share right now, and has a very large market cap of $182 billion. Just want to say a side note. So this is a perfect example of the price that you're paying per share does not equal to the value of the company, because Coca-Cola is selling at $46 a share, but has a market cap of $191 billion. And PepsiCo is selling at $134 per share, but has a market cap less than Coca-Cola with $182 billion. So that is a perfect example of the price that you're buying per share does not equal to the value of the company. So just keep that in mind when you're looking into companies. With a price to earnings of 25, that's pretty high when you compare it to Coca-Cola. But when you look at the earnings per share for PepsiCo, PepsiCo listed an earnings per share of $5.15 in 2019. Woo! But I digress. They have, like I said, both of these companies pay a dividend, and PepsiCo pays a dividend of 3.11. So it's not as much as 3.6 for Coca-Cola, but they both pay a dividend. They both are currently still paying out their dividend. So I wouldn't compare these companies for their dividends. If you're looking into like something that just pays dividends, both of these pay dividend. But you want to look at which one you're going to get a profit off of. If you haven't already watched the video that I've done on Coke and Pepsi, I'm pretty much going to give you a little brief information on both of these again. So like I said, Coca-Cola pretty much makes all of its money from its beverages. They are the world's number one non-alcoholic beverage manufacturer, producer, and all that. They license out their stuff, get royalties for the syrups and all that, but they also have brand recognition like I've already stated. And then Pepsi pretty much doesn't just have beverages. Now, they are Coca-Cola's number one competitor when it comes to non-alcoholic beverages, but PepsiCo I should say not instead of Pepsi. PepsiCo makes 54% of its revenue from its Frito-Lays or its food division, not just Frito-Lays, but Frito-Lays is a big part of that. So like Frito-Lays pretty much is almost any bag of chips you pick up in an aisle at Walmart, at wherever you shop, it's probably gonna be Frito-Lays. That's like Cheetos, Doritos, Tostitos. They like the O's pretty much. But that's not all they have though. So PepsiCo also have Quaker Oats, Aunt Jemima. They make Captain Crunch cereal. So like I said, PepsiCo is well diverse. So when it comes to growth, it's a couple things you got to look at. So with these companies, you want to know what they're bringing in revenue. And when it comes to revenue, PepsiCo blows Coca-Cola out of the water. So revenue-wise, PepsiCo was bringing in $37 billion of revenue in 2019 to Coca-Cola's like 30-something billion dollars in revenue. So I'm going to have to give the growth to PepsiCo, but there's not just on the revenue. I want to state that. So it's more to it. So when it comes to growth, you want to know how much are these companies expanding and are they improving their revenue year after year? And both of these companies have been improving their revenue year after year, but PepsiCo has been improving this revenue at about 8%. And now we're talking about over 60 billion and they still had an 8% growth in their revenue versus Coca-Cola's 6% growth in their revenue. And not only that, PepsiCo is more diverse. So for Coca-Cola to grow from this point on, they would have to come out with some like revolutionary drink, and then they have to be ahead of the curve on trends. So a lot of people are getting into that healthy stuff or health kick. So like water, coconut water, they do have a large portion of like coconut water sales, Coca-Cola. But the reason I give it to PepsiCo again is because, like I've said, they can come out with a new food item and that will probably increase their sales by even more percentages. Like Quaker Oats, they can come out with a new granola bar, a new chip line. I know Smart Foods just came out with the Flamin' Hot popcorn. I love them, by the way. But they have more things that they can innovate with PepsiCo versus Coca-Cola, which is like they just have beverages. Now they did purchase a company, Costa, recently for $4.9 billion, and that's like them getting into coffee. That Costa already had like over 4,000 retail locations in coffee and all of that. But like I've said, PepsiCo, in my opinion, will take it on the growth side. So Coca-Cola does have a better looking price to earnings, which means like you're paying $19 per dollar a share or earnings that the company will produce. But when you look forward 5 years, PepsiCo has a better projected price to earnings ratio or price to earnings growth. So PepsiCo has like a 6 when it comes to the next 5 years price to earnings versus this Coca-Cola's 10 price to earnings growth over the next 5 years. PepsiCo is expected to have more growth in the future versus Coca-Cola, so this one has to go to PepsiCo. Sorry. All right, moving on to the next question that we have to answer, sustainability. So when it comes to sustainability, it goes without saying neither one of these companies is going anywhere anytime soon. And now, as much as I want to give it a tie, I just can't. That's just me in this case. Now, some companies probably will end up tying out, but I'm just not going to give these two companies a tie because, like, let's say that the world has a water shortage. Now, both of these companies need water for their beverage department. That could be a huge risk for both of these companies. But if there is a water shortage, PepsiCo can stop its beverages or shut down its beverage sector and still make money in the food sector. Now, they will be hit because a lot of their fruits and things that that is required to make some of their snacks and foods does require water to grow. They will be hit, but like I said, PepsiCo can pivot from beverages into food and into their food sector and still outlast Coca-Cola if there's like a water shortage or something like that. So you have to keep that in mind. I'm just saying, it's my opinion. Like I said, this is my opinion. I will have to give this one to PepsiCo again when it comes to sustainability. Plus, when it comes to revenue, when you look at the balance sheets, they both have a lot of debt. Both of these companies have a lot of debt. They both have like a 2-to-1 ratio when it comes to equity and debt. But they're so big and they operate on a global scale and they have so many assets that they could leverage for more debt or to raise more capital that, like I said, I don't see neither one of these companies going anywhere anytime soon. But when we talk about debt, that does lead to the last and final question, value. So when you're valuing a company, there are a couple things you want to look at, and this is when the financial statements come into play. So when you're buying a share of a company, you have to remember that you are becoming part owner in this company. So you do want to know all of the assets that they have versus all of the liabilities that they have. And the easy way to measure that would be price to book. You can look at the price to book, and what the price to book gives you is a quick look at if you was to take all of the company's assets and subtract all of the liabilities. So like if this company was to become liquid completely overnight, pretty much pay off all of that, pay off all of the liabilities, what you're left with would be their book value, and then you pretty much take the earnings price and divide that by the book value to get a price to book value. And pretty much a rule of thumb is a lot of people might say that you want a book value of under 1, but I would say a fair book value would be about 3, and that's about fair. Anything over 3, I would say you're probably paying too much. So when it comes to price to book value, the one pretty much is saying that you're paying $1 for every $1 in assets that this company have, and this is the same thing for like if it was a 3, it would be you're paying $3 for every $1 in assets that this company has. So anything under that is when you're paying literally pennies on a dollar. So if you ever heard anyone say they're paying pennies on a dollar for a company, that's pretty much what they're saying is, like if you have a price to book of 0.5 or 0.50, that means you're paying 50 cents for every dollar of assets that this company owns. In the case of Coca-Cola versus Pepsi, when it comes to price book value, PepsiCo has a price book value of 13 and Coca-Cola has a price book value of 10. Now, when you factor the price book value and you also add in the price to earnings ratio, and then you look at their balance sheets and see how much debt these companies have, a lot of analysts would say that both of these companies are overvalued, a lot of these analysts. But when you look at the fair value of both of these companies, I think last time I looked into Coca-Cola, the fair value was considered to be like $18 a share. So if you're paying like $46, it would be considered overvalued, but that depends on how you value the company. You are the person that's in charge of your money. So if you value this company more than $46, or if you see it being worth more than $46, then go ahead and invest. But if a lot of analysts are saying it's overvalued, and then when you look at the metrics to pretty much value a company and you come up with your own criteria, even you might believe that both these companies are overvalued. But when I looked at the fair value for PepsiCo, the fair value for PepsiCo is around $56 a share. So when you're paying like $134 and the fair value is actually $56. Now, I don't think these companies are gonna get hit hard or going anywhere because a lot of investors invest in both of these companies because of the sustainability. So I don't think these companies are going to actually go down to their fair value. Now, they are considered overvalued, but I'm just saying, in my opinion, I highly, highly, highly doubt that they go down instead of up. Like, I can see both of these companies going up before down, especially in times like these when more people have more time on their hands and they're in the house more, so they'll probably be buying more of both of these companies' products. So I definitely would say that both of these companies will go up, especially after looking at the earnings that they've announced for the Q1 earnings. Both of them were above what a lot of analysts expected their earnings to be. So I would definitely say that both of these companies probably will go up. But as far as value, working with the income that I have, I'd have to give it to Coca-Cola for $46 because $46, I can get 2 shares for $100 versus I can get 1 share for $134 with PepsiCo. Now, I'm not saying that PepsiCo isn't a good buy. PepsiCo is a good buy. Both of these companies are great buys. It's just when you look at the growth, sustainability, and then you factor that into the value of these companies, you might think that you're overpaying for both of these, but I would just say for $46, can't go wrong. But like I said, that's for you to decide, not me. You are in charge of your money. So with all that said and done, I would just ask you which one you think is the best bang for your buck, and get out there and make a fail-safe investment. And like I said, do not stop investing. You can do dollar cost averaging when you're investing. And good luck. Let's get it. Let's do it. Make sure you hit that subscribe button. Hit that like button also.